Hello, entrepreneurs. Joe DeCharis, CPA extraordinaire, coming to you live from downtown Bethpage, Long Island, New York, for another amazing episode of How to Win at Business. And before I get started, folks, I'd like to welcome everybody to my team and I, because I couldn't do it without my team, our monthly free workshop. And this is going to be a really, really good one. It's about how to get your tax refund early. And we're going to be covering all kinds of topics about taxes, and also one of my new favorite topics on weird but true tax write-offs, things that the IRS didn't like, but that went through tax court. So I try to tell people, the IRS is not the be all end all authority on taxes, believe it or not. Uh, they don't get their way all the time. The first of all, you have to get audited, and to get audited you need to raise some red flags, and a lot of times that means a bad presentation, presenting deductions the wrong way, in a way that they don't like. And there's all types of ways to present your tax deductions in the wrong way. For instance, just the description of what you're deducting. They don't like strange descriptions, let's say. As long as you're accurate and not misleading, you can safely take deductions that some people, mere mortals, might not be willing or able to take. So we're going to be covering stuff like that in the workshop. Also, tax credits, what's new and improved in 22, and also what's not improved. For instance, what are they going to do with 80,000 new IRS agents? I have a good feeling of what they're going to do, and it's not going to help any of us. And it's actually not even going to help the government, because they've tried this in the past. So the way to register for the workshop is simply, I put a link in the chat. If you can't see it, if it didn't come up for whatever reason, you can just go to bedrockbusinessbuilders.com, the URL that's going across the screen right now, and go to events and click workshops, and you can register for free. Now, if you can't make it on Tuesday, it's 1 p.m. to 3 p.m. on Eastern Standard Time on Tuesday, January 25th. But if you can't make it, because not everybody can make the live event, you'll be entitled to a free replay. So everybody gets a free replay, but only if you register. Also, we'll be giving away free prizes. We'll be playing games. We'll be playing Jeopardy. It'll be interactive, so you'll get to try to stump Joe DeChara, which is always fun. I'll be the first to admit I'm not always right. I've been wrong one or two times, but I might even be wrong about that. But you're all welcome to come and try to stump me. I love when people ask me tough questions, and if I don't know the answer, I'll tell you I don't know it. But that's rarely happen. And if I don't know it, I will find out one way or another as quickly as humanly possible. So tonight, what we're going to talk about is actually, how to get your refund early, how to speed up your refund, and more importantly, how to not delay it, So I took a few notes, that are, some of these may seem obvious to you, maybe not so obvious, but they're common mistakes that people make all the time. And the first one might surprise you. Uh, Unscrupulous tax preparers. Okay, there's a lot of them out there. I work for a few of them. Okay, as soon as I found out who they were and what they were doing, I quickly made an exit. But I actually learned a lot about how the system works and how people get in trouble. And a lot of times it's not anything that the taxpayer does. It has more to do with they went to the wrong person. So the first thing you want to do is you want to pick the right tax professional. Okay, you do not want to do your own taxes. That trying to do your own return, no matter how simple it is probably a mistake. Okay, very, very limited times. There are very limited instances when somebody doing their own return is is okay. But the good news is, even if you can't afford an accountant, the IRS actually has some ways to file for free. Now, if you're a single individual and you have a job or you just collected unemployment, you could go to the IRS and they will actually help you prepare your taxes for free. Okay, they have a program called VITA. I did VITA when I was in college. I do not recommend VITA for the simple reason that you're working with people that have absolutely no experience. Now, hopefully, they're being supervised by somebody that does have experience, but you're better off just going to somebody with experience. And a lot of times, and I qualify this, if it's a simple return, like I said, I have clients that only got unemployment. There's all it is you got to fill in the blanks and file your return. Okay. But unfortunately, the way the tax laws are today, there are very few returns like that. And I'll tell you why. If you have a dependent, if you have a child, if you have student loan interest, charitable deductions. I mean, all of these seem very simple, but if you don't do it right, you're not going to get the benefit of the deduction. So, my advice again, if you can't afford to go to an accountant, do not try to do it on your own. Even if you have a return that is beyond simple, don't do it yourself. Go to the IRS. You can go to irs.gov. Let me see if I could find the link. IRS. So all you got to do is go to irs.gov and let me see where get answers to your tax question. Okay, right on the homepage, file your taxes for free. Okay. So now also, not only will the IRS help you, but there's free tax software out there, and you can get it all right from the website. So if you're watching this on YouTube and you don't have the benefit of the link, all you got to do is go to irs.gov and it's right there. Free file your taxes for free. So that's the first thing. Avoid bad tax. How do you know that they're bad? Well, if they're going to guarantee you a refund, they're probably bad. Nobody can guarantee you a refund. If they guarantee that you're not going to get audited, they can't do that. Nobody can guarantee that anybody is not going to get audited. What I tell people is I can greatly, greatly reduce your risk of being audited. And if you're a client of mine and you follow my directions and you get audited, I will represent you for free. Okay, that's just me standing by my word. I'm not going to take any kind of deductions that I think won't pass mustard. So that's the first thing. So that's more of the best offense is a good defense, if that makes sense to you. You don't want to get your refund delayed. You don't want to have your tax return held up. And if you're one of the few people or one of the millions of people that had their tax refunds delayed last year for all kinds of crazy reasons, COVID, blah, blah, blah. They're understaffed. My aunt, who worked at the IRS for over 20 years, just got her 2020 refund 2 weeks ago after months and months of phone calls and trying and getting the runaround and even going to her congressman and him getting the runaround to the point where the congressman actually spoke to the person that was gonna get the return through the system, only to get delayed to find out that that individual was out sick on COVID. So you would think, an organization this large, just because somebody's out sick, it shouldn't stop things. I mean, they should say, okay, if somebody in this position is sick, somebody else is going to do that. We do that in our firm. We do that, and we're a small firm. And our directions are: listen, if somebody is out sick, it happens, or they're going on vacation, the work doesn't stop, somebody else picks it up. So, we want to avoid any delay. So another way to avoid the delay is make sure you have everything. Okay. They're going to start accepting returns on January 25th. Okay, so I have a client. She's got a very simple return. She had unemployment. That's it. She gave me the unemployment return form. I did it. We can't file yet because it's too early. We're not in a hurry because she actually owes $80. So she just wanted to get it done. I'm more than happy to get it done. And then a few days ago, she sends me an email. Oh, I got something else. She got interest from the IRS because she had to wait for her refund. You see, if they don't give you your refund when they're supposed to also give you interest on the tax refund. So she got $18 worth of interest. Now, had this been a different story, and had we had more information and we filed and we left that $18 off, there, there's no guarantee that it wouldn't have delayed the refund. So the first thing is to make sure that you have all of your information. How do you do that? Well, the easiest way is to look at your last year's returns. Look at last year and the year before. Make sure you have all the same info, unless, let's say, you had a job that you don't have anymore. Okay, if you had a job and you can't even remember if it overlapped from 2020 to 2021, make sure, call them up, say, am I getting a W-2? If you're going to be getting 1099s, the 1099s are supposed to be mailed out by January 31st. The filing due date is in February, okay, the end of February. So yeah, a lot of people that have to issue 1099s do it late, okay? We're not one of them. So if you're going to get a 1099 or you're not sure, make sure before you file your return. Now, not including a 1099 is one of the worst things you can do, especially now because they are targeting 1099 people. Now, what's a 1099 person? If you're part of the gig economy, okay, that's the new catchphrase, the gig economy. That's people that drive for Uber. If you're doing DoorDash, okay, one of these side gigs. If you're running errands and you're on the books, if you're doing it as a business, any kind of side business, you might get a 1099, especially the way the new rules are with the online transactions. Okay, if you're doing business transactions online, you may be getting a 1099 when you never got one before. For instance, my son-in-law, who has an eBay store. It was a hobby. It is a hobby. He buys and sells posters. And unfortunately, even though it's a hobby, the IRS now says you're a business. It used to be the other way around. If you were a business and you had losses, the IRS would say, no, no, you're a hobby. Now they're doing it the opposite. They're taking millions and millions of people that have hobbies and they're saying, oh, you're a business. Well, what's going to happen? There's something called the hobby loss rules. Okay, if you're not incorporated, and I recommend everybody get incorporated, even if you're running a hobby now, like my mom and my sister, they have an Etsy store. They're making a minimal amount of money. They spend more money than they bring in, but they're going to get a 1099. Okay, now if I didn't incorporate them, they would be a sole proprietor. And if they're a sole proprietor spending more money than what they earn, they have losses. Well, the hobby loss rule is that if you lose money 3 out of 5 years, they can consider you a hobby. So they leave it up in the air. So now what they're doing, I'm wondering to see what they do when all of these hobby people have losses every single year because it's a hobby. They're not in it to make money. They're in it because they love it. I want to see what the IRS starts doing with those people. That's going to be interesting. It's going to take years and years for us to find out how everything shakes up. Now, also file electronically. Now, this might seem like a no-brainer to most people, but actually it's not. I have seen last year I ran into an accountant. I didn't run into him. I got his client as a client because they fired the accountant, and I found out that he filed everything on paper. You're not allowed to do that if you're a professional tax preparer, and you can't be a fly by night tax preparer anymore. It used to be anybody could be a tax preparer. Okay, now anybody could prepare taxes, but you can't file electronically. You got to be registered with the IRS. Okay. And to be registered with the IRS, you need to be an enrolled agent, a CPA, or an attorney, or an actuary. I never ran into an actuary that files tax returns, but for whatever reason, if you're a licensed actuary, an attorney, a CPA, or an enrolled agent, you have to be registered with the IRS now. You could actually go on the IRS site, and this is another way to vet out unscrupulous tax preparers. You can go to the IRS and find out who's registered. And to be honest with you, I don't even know where that is. I can't give you a link. I could probably find it, but one of my VAs found it. Now, just so you know, the last couple of years, the IRS has been clamping down on tax preparers. Why? Because tax preparers are the biggest instigators of tax scams. So that's why, and it's long overdue uh, that they actually are vetting unscrupulous tax preparers. But if you're going to file, make sure you file electronically. If you don't file electronically and you go like somebody like me, I have a situation where it's a weird situation because the IRS is telling my client that he has the wrong PIN number. It's a personal identification number, and they won't accept his return electronically. Well, the only other option we have is to file it by paper. And my fear is, and we're still trying. I have him calling the IRS hotline, which is again another issue. They have a special hotline for PIN numbers, and the first time I sent them there was a message that the system was down. This is what we're dealing with now, folks. The IRS system was down, uh, and he's getting a big refund, and that's why it's important. So now, if we file by paper, it might take them years. Literally, it might take years because they're not even. I don't even know if they're opening mail right now. So that's another way to speed up your or not delay your refund. Now, also, this isn't speeding up your refund or delaying it, but tax credits. There's a lot of tax credits out there, and there's a lot of tax credits that are getting messed up by the IRS, namely this advanced child credit. Okay, so they came up with this thing that if you have a child and you were going to get a $3,000 credit at the end of the year, they were going to help families out by giving them $250 a month in advance. So now I'm seeing situations where there were divorced or legally separated individuals, and one spouse got it, the other one didn't, and they're getting letters that are all incorrect, either the wrong amounts or they gave it to the wrong. I mean, it's just a nightmare. Uh, so with that, if my advice with that is, if you got a letter that's wrong, you're gonna have to try to call them, because if you file a return and it's got information that doesn't match the IRS's information, it's going to be delayed. So either you can call them or you file the return with the wrong information that came from the IRS. You get your refund and then file an amended return later on. And that the amended return will take a long time to get, but probably not as long as it would take if you filed with the wrong information. So anytime you file with missing information or wrong information, it's going to delay your refund. Now, this includes, interest and dividends. If you transpose a number, if you use a wrong Social Security number, if you take a dependent with the wrong information. Let's say you have child and dependent care credits where you, like my son sends his two daughters to daycare so that him and his wife can work. Well, the daycare center has to provide their name, address, and federal tax ID number. If you don't get that, that could delay your refund. Okay, so you got to get on the phone. You got to ask these people for this stuff. Another thing, and this is huge. Everybody should have their own tax account. So I'm going to give you the link for that. Again, you go to the irs.gov. I'm going to actually put the link in the chat box here. It's a long link. Or you could just go to irs.gov. Let me go there. And it's going to say, so there's a couple of things you can get here. So right in the middle, and they keep, changing the site around. So that's why I have to keep going here. There's a couple of things that you can click on and find out and confirm what the IRS has on their side. Because like I said, if you file your return and it doesn't match what the IRS has on their end, it's going to be delayed. Even if you know that the information is wrong, my advice is, if you're getting a refund, file it with the wrong information. I know that sounds crazy, but if you want to get your refund quicker, you file it with the wrong information and then file an amended return after the fact. And don't do it right away. That'll totally confuse them. Wait until you actually get the refund and then file an amended return. Okay, so on irs.gov, there's a couple of very good links. One of them is get your refund status. You're not going to do that, and give them at least 3 weeks after you file. Now, you want to file as early as possible after you've confirmed that you have all the right information. Okay, so you want to file as early as possible, but first you want to go to these links. Now, let me caution you also. This first one is get your tax record. Okay, you want to get your tax record because a lot of times you might owe money and you don't even know it, because guess what? The IRS is delayed. The post office is messed up. So I've had people that got penalty notices, tax due notices, and they never get them. So on the IRS's end, they're saying, oh, you owe money. Well, guess what? If you owe money and you file your return, they're going to take the refund. So if you owe money, and if the IRS says that you owe money and you don't, what you want to do is you want to get that resolved with the IRS before you file your return. Now, sometimes you can resolve these issues quickly, especially if you have a CPA, an enrolled agent, or a tax attorney. You give them a power of attorney, and what I do is I get the power of attorney. I call the IRS. I have a special hotline for tax preparers, and then I will fax them the power of attorney. That's the quickest way to get a tax issue resolved. So now, once you get your tax record, which will show, your tax history. I don't even know how far back they go, but you'll see your tax record, your filing, what you owed, what they paid you back, and all of that stuff. Now they also have get your economic impact payment status. This is important because if you didn't get your stimulus checks, you could claim it on your 2021 tax return. So if you didn't get it and you don't put it on your return, I believe you should still get it, but there's no guarantees. So you want to have the right information on your return. Uh, Also, let me see what else do they have here. Sign into. Oh, if you have those advance payments, they have view your child tax credit payments. So if you have a child, whether you got the payments or not, I would go on here and check it because they may say you got it and you didn't. Like I said, I see situations where divorced or separated parents, one parent got the advance, the other one didn't, and the IRS they split it in half. I've seen all kinds of already, folks, of mistakes. They also have file your taxes for free here, uh, and that's it. So there is some useful stuff on the IRS site. Now, also, before you file, make sure that you're applying for all the credits that you're entitled to. There's too many credits now for me to go into, but if you own a business, uh, there's a whole set of credits. There's the payroll. If you had somebody on payroll that had COVID, you can possibly get a credit on your payroll taxes. Uh, if you're an individual, they got the credits for child and dependent care credit. You can get a credit for having a dependent, believe it or not. It doesn't have to be a child. It could be your mom. Anybody that you're claiming as a dependent can also give you a tax credit. Now, if you don't know the difference between a deduction and a credit, a deduction reduces your taxable income. A credit gives you a credit towards your taxes. Now, last but not least, what I'm going to explain to you is there's two different types of credits. There's a refundable credit and a non-refundable credit. A non-refundable credit reduces any tax liability. So if you don't have any tax liability, you don't get the credit. Okay. A refundable credit is a credit that you will get even if you have no tax liability. For instance, the earned income credit will give you money in your pocket if you qualify for the earned income tax credit. All right, so that's my story. I'm sticking with it. Joe DiChiara, CPA extraordinaire. Visit bedrockbusinessbuilders.com, go to events, sign up for our free workshop, and God bless. And I will see you again soon. Thank you.